Now, starting with the BRVM 10 index closed trading at 226 points. It was up about 0.3%, while the BRVM composite gained about 0.2% to close at 204 points. Total value traded on the day was 220 million CFA francs, so slightly higher than what we saw the day before, while the currency weakened to 502 to the US dollar. Moving on to Ghana, the GSE composite index closed at 1,900 points, down about 0.4%, taking its year-to-date change to 58.4%, while the GSE Financial Stock Index closed at 1,634 points, down 0.6%. Year-to-date, that index is up 57.1%. Moving on to Nigeria, we did see the market extend the recent gains. The NSE All Share Index up about 0.24% to 37,975 points, extending the gains. Like I mentioned, volumes were lifted, however, by bulk trades in Transcorp, First Bank, and UBA. But overall, we did see volumes fall on the day. We did see as well that the small cap companies continue to dominate the gainers. Meanwhile, retail banking remains a relatively small part of the loan portfolio of Nigerian banks. However, it is an increasing focus for most banks that seek to exploit Nigeria's consumer story. And to discuss the trend, I'm now joined by Jude Anele, Head Retail Banking at Diamond Bank. Jude, thank you very much for joining us. All right, Jude, let's talk about what you think will define the winners and the losers here, because we continue to see quite a few banks getting involved in retail banking. Recently, we're seeing a lot more jingles on the radio, a lot more people being aggressive about consumer finance. So talk to us about who would win and who would lose in this context, given the risk that Nigeria offers. And of course, we do know that infrastructure is a big challenge if you're looking to play in the retail banking space.
Yes, good morning, Wale, and thank you. It's a beautiful day in Lagos. Every bank right now in Nigeria is interested in doing retail banking, and the winners will be those that get it right in terms of distribution. Distribution is key. If you have the distribution mechanism right, most times you win, because in retail space, it's about numbers, and if you don't handle the numbers well, the cost can kill you. Right. Okay, but the losers will be those that just focus on the high-value customers in the society, where your volatility will still remain high and does not give you the stability you require for your funding. So I think the winners will be those, clearly, one, who have the distribution network or mechanism, two, who have a full bouquet of product for the retail consumer. So it's not just the deposit product, but also the loan products. Some deposit products are actually asset-driven. So if you don't give people the hope that they can borrow from you when they have need for it, they might not bank with you in the first place. So you must balance both the loan products and the deposit products for the consumers.
Right, but do you anticipate that we would see a lot more lending to the informal sector? We know that for those that have been fairly successful up to now, there has been a major focus on the formal sector, looking at people who have steady salaries, especially for the consumer finance space, linking all this to bank accounts. So do you get a sense that we may be moving into the informal sector a little bit, particularly from the consumer finance side, given all the initiatives we're seeing around things like financial inclusion, for instance?
I believe so. One or two banks that I know about, including Diamond Bank, have ingrained in the proposition for that informal sector a loan proposition. Of course, it's a test and learn thing. There's been nothing to hold on to in terms of experience in that area, so you run some risk. But what we have found in terms of statistics and data over time is that people in the informal sector actually pay off faster on their loans than those in the very formal sector. These are people, if you lend those small amounts to them, they find it easier to pay back. Actually, we have more good people on the lower side than the upper side. So I think that banks that focus on those areas will not have a lot of defaults on their loan books. And from the little Diamond Bank I've seen in that area, the performance is quite high and good.
And staying with segmentation, if you like, beyond just looking at formal or informal, we are seeing some deliberate strategies towards segments like women. And I want to get your thoughts about how you see this moving forward.
Yes, there's been some focus on women, especially when it comes to financial inclusion. The idea is that if you look at those that are financially excluded in Nigeria, more of them are women, and it's understandable. Clearly, the men are more forward with banking activities. Most women are housewives, and they actually don't have time to do their banking. That is one. Two, you also find that most of the conventional bank products don't suit women, really. You see women banking with those conventional products, but what you find is that women are more concerned with target savings. A woman will want to ensure that the education of her child is assured in the future. She may want to save for that. She may want to save maybe for emergencies, in case there's some crisis in the house. You may want to save for some jewelry in the future. So if you don't have those target savings propositions for women, what you find is the conventional people. So when women buy jewelry, it's not just to dress up, it's always to store something, some value, in case of emergency in the future. So I think the products that will win in that space, especially for women, is those propositions that cater to those target savings propositions that women want. So you find that most of what banks are doing now is to target more of those women, because women find it difficult to open a bank account, but statistics have shown that those that open are actually more faithful and they save more than the men. So while men are more in a hurry to open an account, when women do eventually open, they actually save more and they are more disciplined in terms of saving. So banks like Diamond Bank that are focusing on women have realized that fact, that the more women you have, the more stable funds you have. It may be difficult getting them on board.
Right. Okay. Well, the whole concept of retail banking is not totally new in Nigeria, but I want to get your thoughts about, given the focus now, your thoughts about how the contribution it is likely to make to the earnings of banks going forward, say over the next 5 to 10 years. How significant do you think retail banking will be in terms of the bottom line?
For instance, in terms of risk appetite in most banks, including Diamond Bank, you find that retail bank has been given about 30% of the loan portfolio. And this shows you the level of importance that is being placed on it. And this is for 2013. You may find that in the next 5 years, retail banking, in terms of assets, may be contributing almost 50% of the yield that banks get from their assets. And the good thing about it is that the yields here and the returns are a lot wider and higher in the retail space, if you get it right. Yeah. So I think in the next 5 to 10 years, you may find retail commanding about 50 to 60% of bank earnings, especially those banks that are focused on retail, because they found that on the corporate side, there's a lot of volatility on, and the competition out there is very fierce. So they are going to more benign segment of the market, which is the retail end. So it's difficult to play there still. Well,